This is how to get an over 90% win rate on your trades every single trade. I'm going to show you step by step the exact strategy that I use to get these results. So the first thing is you want to open up a list of futures underlyings that have options available to trade on them. If your broker doesn't natively display this list, copy down these ticker symbols, make your own custom watch list. And then you also want to have IV rank or IVR on your watch list. Order everything from high to low IVR, and you only want to look at things to trade that have an IV rank of at least 30. So anything over 30 is okay, under 30 is no good to us. Now, in this instance, we're going to take a look at live cattle, which has an IV rank of 40.6, an absolute IV level of 17.6%, and I think we should be able to get some nice premium on this underlying or on this trade or position. So once you've selected your underlying, come over to where you can see a list of expiration dates, and we're going to do something a little bit different. We're going to go way further out to about 120 days, and we're going to open up that expiration date, which is currently August 1st in this instance. And now we can see the options chain. We have calls and puts on either side. We have this orange horizontal line that shows us where the price of live cattle currently is with respect to the strikes that are going down the middle here. We have our dotted blue lines which show us our 1 and 2 standard deviation levels on either side. We have this vertical orange bar that shows us the expected move as well. And the key thing is you want to make sure you have delta on your options chain, on both your calls and on your puts. Okay, and what we're going to be doing is we're going to be selling or writing options contracts. And the reason why we sell or write the contracts as opposed to buy them is because we end up with a much higher probability of profit. So let's say, for example, if you thought that the price was going to go higher than where it currently is at 204, let's say you thought price was going to go to 210, and you wanted to get some exposure, you might buy the 202, for example. Okay, and in this instance you're going to pay $6.25 per share of the underlying in the contract to basically buy this contract. And so because you're paying $6.25, that gets added on to your break-even level. So you would need price to go $6.25 or 27 cents over 202, which would bring you to this 208 level where you can see this bar goes from gray to green. And when it goes to green, that's where you'll start making money. Anything below that, you're actually not going to be making money. You're still trying to work out of your break-even area. So in this instance, if price goes lower, you lose. If price stays where it is, you lose. If price goes higher but not high enough past 208 or 208.27, then you actually also lose. So you need a lot to happen in order to make money. And as you can see here, you have a pop of 46%. So you've got a less than 50% chance of making money on this trade. Now, if we were to just flip this and sell the 202 instead of buying the 202, now we collect the premium instead of paying the premium. And so if price goes lower, we make money. If price is where it is, we make money. If price goes higher but not higher than 208.2, then we actually still make money. So price has to go way past our strike in order for us to start losing money. And that's just one of the many reasons why we prefer to sell instead of buy. Now, what the strategy I'm going to show you here is going to get you a over 90% win rate, and it only works on futures because of something called span margin. You don't need to worry too much about what that is right now. You just need to know that this is for futures specifically. So let's start with the call side, and you want to come all the way down to a 5 delta on the call side, and you want to sell that. So we're going to sell the 233, and we're going to do the same thing on the put side, go all the way down to the 5 delta and sell that. So we're going to sell the 168. And what we've done here is we've created a range for ourselves between 168 and 233. Okay, and we want price to stay within this range. Now, price, so our pop here is, which is probability of profit, that's your probability of making at least 1 penny on the trade, is 93%. So you've got a 93% chance of making money on this trade. That's if we hold till expiration. But typically we do not hold till expiration. We get out at between 25 and 50% of max profit. So in reality, our actual win rate is going to be closer to 96, 97%. Okay, so we're going to win basically almost every single time very, very easily. Okay, this is pretty much as close as you can get to getting paid via, in the form of some sort of cash flow from the market. I wouldn't go as far as to say that you could use this as a sort of salary or a monthly check or something like that, but this is pretty much as close as you can get to it. So in this instance, you're going to collect $390 up front, and your broker is going to require just under $690 in buying power to open this trade. So as you can see, we're getting well over 50% return here in 120 days with over 90% win rate. And if you were to get out, say 50% of max profit, it would be 50% of this 390 number here. If you were to get out 25% of max profit, it'd be 25% of this 390 number here. And basically, the less profit you're happy to take, the higher win rate will be. But if you wait all the way to expiration, all 120 days, you're going to have a 93% win rate, okay? In reality, you'd probably even have a higher win rate than that anyway, just because implied volatility is overstated more than actual volatility most of the time. But even still, your win rates are crazy high, crazy high. And this is great for beginners if you are starting out and you want to just stack some wins. This is great for people with small accounts. As you can see, not much buying power is required. You're almost guaranteed to make money. Obviously, nothing is guaranteed, but this is as close as you can get. And even if you have a large account, this is still really good, because you can put some bigger positions on and get some big chunks of premium collected, knowing that you're almost, you've got an over 90% chance of being able to keep or win that trade and keep a chunk of that premium. So it doesn't really matter where you are in your account size or in your trading journey. This is good for everyone, really. And then obviously, if a position does move against you, you can still do things like making adjustments, etc. You can roll down, up, out in time, etc. This percentage here, your pop, doesn't account for any of that. So even if you don't know how to do that, you're still going to get a really high win rate. As you can see here, 93% if you hold till expiration. If you do know how to make those adjustments and manage, you're going to have an even higher win rate on top of that. So the only other thing is you need to keep your buying power in check, your position sizing in check is really important. And the way that you can do that is by using the free position sizing template that we've got. The link for it is in the description, and the way it works is you enter in the size of your portfolio. So say if it was a $50,000 account, you can then enter in whatever the VIX level is. So say if it was 21.8, and then everything is going to be calculated for you. All you need to do is just use this information to form the backbone of your portfolio, and over the long run, you'll be fine. If you do want to learn in more detail about what we do and how we do it, click on EDS Premium, get yourself signed up. Inside, you will have access to this exact portfolio that I showed you in this video, and you'll be able to see all of the positions that we place, all of the adjustments that we make, all the management that we do, etc. Everything in real time. So you can either use that information and reverse engineer it, study it, copy it, it's up to you. There's a full course, so no prior knowledge is required. We will teach you everything that you need to know from start to finish. It's a private community, so if you get stuck, you can speak with myself, with other like-minded individuals. And there's a 100% money back guarantee. So once you have been through the full course, follow some of our trades. If for whatever reason you haven't been profitable after 6 months, then we will work with you for free until you are, or you can request a full refund. So it is completely risk-free. It's $9.99 a month to join, but the price will be increasing Once you're in, however, the price is locked in for you for life, so you are rewarded for getting in early. The aim of EDS Premium is to teach you the skill. We don't want to keep you dependent on us. We want to give you the skill. Once you've learned it, no one can take it from you. We aim to get you to that point of where you are self-sufficient within 6 to 12 months. We've already got students inside that are having great results. It's not even just about the money that they're making, but more so that they're understanding the logic and the mechanics and how to actually make adjustments, how to turn losing positions into winning positions. And that's the goal here. The money will come automatically. So with that being said, I will see you guys on the inside.